Fantastic, everyone. Thank you and hello. Today is 9th of November, 2022. I want to welcome everybody. My name is Kimberly Smith, and I'm your host and a former compliance officer at MLRO. And I'm also the co-founder of Silo Compliance System based in the Cayman Islands. I want to welcome all the Silo users and all of our audience members listening in today. We also want to welcome back to us our guest, Angela Mealy. She has been a compliance consultant based in the Cayman Islands with 20 plus years experience. Welcome, Angela.
Thank you very much. Nice to be here. Hello to everyone.
Nice to have you. Nice to have you back. And as Angela and I always say, we never we always have lots of words. Yeah, there's always lots to talk about. But we will keep this right at an hour. I do always make sure, usually about 20 minutes top of the hour, I will make sure that we stop and kind of ask some questions. Just so you know, everybody should be able to hear us now. And again, just a little bit of housekeeping. This is not legal advice. Angela and I are not lawyers. And there are some issues today that we raised that you really should seek some proper legal advice. Hopefully I'll point that out to you whenever we get to those slides. No handouts today. We do welcome Q&A from the audience. Just use the question box. Feel free to add any comments too. I do try and read those as I'm kind of going through. Those who need certificates of attendance, those will be auto-generated and they are emailed only to live attendees. So you have to be here with us today to get that. And it will hit your inbox in about 1 hour after the end of the broadcast. And if you have any issues with that, there's a contact in that follow-up email too for you to reach out to. And again, the recording will be available to everyone who is registered, and it goes out after about 3 to 5 business days. We have to do a little bit of editing to fit it in that hour. So again, thank you very much. I do want to start out real quickly with a quick poll. Let's just find out how we're doing. And let me see if I can get this poll started. If Tom, you haven't done it already. There we go. Yeah, we just want to find out if you've had any regulatory feedback regarding your EDD policies and procedures or quality of your EDD. So if just take a moment, if you don't mind, and answer that question real quickly for us. So your options are yes, you don't have any negative feedback, or yes, you have feedback requiring that you do more. No feedback has been received, or of course it's not applicable for your role, because I do know we have some IT consultants, and I want to welcome all of you. I want to welcome everybody from all the jurisdictions and from all industries. All right, Tom, if you want to go ahead and start closing that down. So the results that I'm seeing are so far 17% have gotten feedback that was not negative, saying that you were fine. 22% of you have said that you have gotten feedback requiring that you do more. 41% of you have said that you've not had any feedback. All right, thank you very much. Angela, what's your experience?
Normally, nothing, if everything's okay, nothing is said.
Okay. All right.
The one thing I do think everyone in the audience needs to know is often EDD, but not always, is applied in certain circumstances that can be more complex than a regular client may be, depending on what your client base is. So it's really important that you as the compliance officer or individual onboarding that client understand the structure, understand how the cash flows, if that is applicable, and understand the purpose of this company or whatever it may be. That also needs to be understood by your regulators as well when they come in and they take a look at your files. Okay. So as I was saying to Kim earlier before we jumped on, just to begin, my approach is I need to know that I'm satisfied with my file. My directors are satisfied with the file, and then hopefully the regulator is satisfied with the file and what we've got on that, and that file needs to stand on its own in case I'm killed walking across the street. Exactly. Okay.
Exactly. Yeah. And as we were even kind of saying, sometimes these notes or these what I call either executive summary or a file note or file
File.
memorandum on that file, because you might have onboarded somebody, whether it's just CDD or EDD, high risk or not, um, that needs some explanation as to why you accepted certain documents or why you requested specific EDD, um, and and it's not going to pop up three months from now. It's going to pop up 5 years from now, and you might have had staff turnover. So that's very important that whoever is the compliance officer or the manager who's going to be responsible for that audit 5 years from now, that when that file gets picked to be reviewed, that they have that historical record, not just a big thick file with a lot of documentation in it.
Yeah, and it
Um,
also helps with your ongoing reviews as well.
Absolutely, absolutely. So I have a slide here for those who are just listening in. I always like to kind of start out with what our struggles are, what some of the struggles that I'm seeing. And Angela, you may or may not agree with me, or you may have some additional struggles that you've seen. Um, I think one of the biggest complaints I hear or challenges that I hear from people is that they feel like they're not playing in a level playing field across jurisdictions. And I can see that, being an American, and I am based in the U.S. I've got my U.S. bank relationships. They don't require a tenth of what I have to supply to Cayman banks, where I'm involved. Um, that's not, have that said, I can still. I've never been asked by Cayman banks to supply anything more than I couldn't. I've never been denied business in other jurisdictions. But I feel like my U.S. banks, I gave them my driver's license and my social security number, and boom, that was it. And I pretty much never hear from them again. So it seems as if some people are really struggling, saying we can't compete if we're a smaller jurisdiction that has to require so much more in the CDD area as well as EDD, with the larger, quote unquote onshore jurisdictions. Are you kind of hearing that too, Angela?
All the time. Now, the one question I have for you, Kim, is in regards to your social insurance number
Hmm.
or social security number. It may be a situation in the US where perhaps financial service providers can actually get information through
Oh yeah.
your. Okay,
Oh yeah. Oh,
we
they can
don't
get
necessarily.
everything on me through that
Right,
number.
whereas we don't necessarily have that in certain offshore jurisdictions, right?
Yeah.
So, but
Yeah.
there is a general feeling that a lot of information is being requested. Some feel that it goes above and beyond. I have seen situations that have, for whatever reason, taken quite some length of time to set up bank accounts for regulated financial service providers,
Hmm.
companies that are regulated by our local regulator. Um, uh, it could be a combination of a number of things, including the fact that, excuse me just for a second, the fact that you've got a, sorry, there, apologies, my bank was calling.
That's okay. Yeah, yeah. Saying, what are you talking about? They're listening
Speaking
in.
of which, I probably want DD. Um, you, it is tremendously onerous at the moment. And I think there's also concern that if everything isn't on file, the there may be a concern of being deemed to be in breach if you're a financial service provider. Um,
Yeah.
there's also a lot of outsourcing going on globally. All right, so you may be dealing with a situation where you think you're applying to a bank in a certain jurisdiction, but you find out that the actual review is being done in a very different jurisdiction. All right, that is maybe not as familiar with your requirements in your jurisdiction, and I think that is also slowing things down. So
Yes, and
it's not
yeah, I
operating
do
at the
agree with
moment.
that. Yeah, I do agree, especially if you're working for a large group and you have offices across London, Hong Kong, Cayman, New York, Canada, and then of course there somebody that compliance department's in maybe based in Canada, for instance, but then they don't really understand the ins and outs of Cayman requirements for CDD and EDD. So yeah, so they absolutely, that is a problem I am also seeing.
Mhm.
So again, if you are frustrated in these areas, whether you feel like you're not in the level playing field competing with the larger jurisdictions that don't seem to have the tighter regulatory requirements that the smaller jurisdictions are kind of having to deal with right now. You're not alone in your frustration. Um, Unfortunately, I don't have any answers for that or solutions for that. One of the things I kind of wanted to know is like, do you think that um, tighter CDD and EDD will ever be a competitive advantage?
I think it depends on the client. So, for instance, with some large global clients, depending where they're based, okay,
Mhm.
they may very well be happy with a lot of requirements. Okay, checks the box in some instances. It depends on the industry. All right, older, more
Yeah,
established industries seem to be more comfortable with it than newer industries. And of course, we've seen a plethora of new industries coming up the past 10, 12 years with virtual asset service providers, crypto exchanges, etc. And some
yeah,
of those institutions are not completely cryptocurrency. They actually, may have bank accounts, etc. So a lot of yeah, it depends. Like anything else, it just depends on the client. The
yeah.
Europeans seem to prefer a bit more check the box exercises versus say North American entities. All right, and that's once again that's not in every case. That just seems to be personal opinion on my part. So
Okay. All right. Well, just to kind of go over this slide a little bit for anybody who might just be listening in, so we kind of mentioned that our struggles are, some people feel like there's not a level playing field across jurisdictions and CDD and EDD requirements. If any of you listened into last month's webinar broadcast, we talked about source of wealth, source of funds. One thing that was mentioned that not everybody enjoyed hearing is that there seems to be more of a kind of a focus to get source of wealth, source of funds information as part of CDD.
mhm,
Um, and you 10, 15 years ago when I was, frontline compliance, I would not have done that unless only if for high risk clients would I have done that. Um, Also, CDD and EDD is not necessarily available for new corporate entities and startups. Whenever in the Caymans, BVI, and a lot of jurisdictions, even the UK, when you're setting up a company, you don't have past financials, you don't have transaction histories.
right,
Um, so sometimes you've just got this your basic corporate documents because the company was just set up, and of course your focus then is on the beneficial owners and directors and shareholders of the company.
right.
Holding companies too that are set up to just hold for instance, like a plane or a house or or a boat, or something. A lot of these holding companies are set up just to hold one asset, and again, then your focus is not on financial history and transactions; it's just on the controllers and UBOs of the company.
Mhm,
Um, New companies that are going to be an active company, you know, again, business plans, things like that, they have to pivot, especially in the next few years as we're going through this kind of global recession area. I mean, everybody's kind of worried about the economy. Companies are going to have to change and they're going to have to pivot and they're going to have to offer new products to stay alive, enter new markets. And so you might have onboarded a new company one day with the understanding that they were going to do X, Y, Z, and then a year later you're doing a review and it turns out they've pivoted and suddenly they've got higher risk products and entering higher risk markets to stay alive.
mhm,
So that's a challenge as well. And of course, the cost of EDD is prohibitive for many smaller firms. Documentation, retaining that documentation, it can be very difficult. Um, On-site visits are impossible. There are these EDD services, but they can charge 500 to I've even heard $5,000 for an EDD per client, and that's when you get these boots on the ground people, doing almost like private investigative work. It seems like,
mhm.
and of course documenting your searches and stuff. Moving on, and this slide is mostly just for our real newbies, for people who are not familiar. Again, I know we have a lot of IT consultants, in the background, but so this slide here is just that basic risk assessment process for those who don't know. When you get a new client or a potential new client, your first step is you're gonna obtain some CDD pre-boarding, and CDD stands for client or customer due diligence, and that is often like the ID, address verification, some corporate documents if it's a company. You're going to then assess, and then that risk assessment's often based on things like jurisdiction risk. Where are they operating? Who's behind that company? What industry are they in? How do they get their wealth, or how do they get, how do they earn their salary or wages? Based on that information, you're going to do a risk assessment, and they're going to either be low or medium, or what some people refer to as normal risk. Often,
Mhm.
if that's the case, you proceed. If there is any high risk factors, maybe that client or customer is in a higher risk jurisdiction or in a higher risk industry. If that's the case, you then have to do enhanced due diligence, what's referred to as EDD, and that is also in most jurisdictions, I think probably in all jurisdictions, you then have to get senior management approval to then proceed with the business relationship or deny it.
Or even board approval.
EDD, I'm sorry, what was that?
Or even board approval.
Yeah, or
Um,
even board approval, yeah, yeah.
Depends on
And
what your meeting is.
EDD can also be, it's not just documentation that you get or information, for further information you get for the onboarding. It could be include things like frequency of monitoring. You might, I know, I think a lot of people kind of say, well, if they're high risk, we monitor them once a year, versus if they're low risk, we only review them every two years or 3 years, something like that. In some cases, you may also limit certain services, higher risk services, or limit certain transactions, whether it's by amount or where those transactions come in and out. So you could do that, and that's one of those areas where I say, especially if you're a bank, you might want to get some legal advice on what you can limit or prohibit, because the last thing I'd want anybody to do is prohibit a transaction and then get sued later for stalling a deal or something. So
Yes.
please get that legal advice there. Our next slide, we're talking about high risk ratings. And what's the obvious to me is you have a customer who's a PEP. And again, for our newbies, PEP stands for politically exposed persons. Um, they may be from a higher risk country or higher risk industry, or they may be unable to meet all your compliance requirements. And for those reasons, that individual, because these are usually individuals, are usually automatically high risk. Simple, easy to understand. What is less obvious? And let me get your thoughts here. What if you get some information on the individual, and after review, we really don't think they're high risk? Maybe they were born in a high risk country, but otherwise their nationality, where they live, everything else is low risk. They only have just one tiny little high risk factor. Maybe so, but maybe one little trigger is what says, oh, they're higher risk. In your experience, Angela, can
Mhm.
we make the call that they are actually lower risk, or must we treat them as higher risk?
Oh my goodness, Kim, that's an impossible question to ask. Um,
Sorry, did I throw you in the deep end
you
there?
totally threw me under the bus here. Okay. Now, once again, this goes back to making sure that your file is complete and accurate. Now, that you're going to need to look at your local legs and regs and sort of best practice, and also what your manual says as to how you even approach this situation. There are companies that will say, all right, we can appreciate that we have a client that perhaps has been born in a high risk jurisdiction, but is not doing their business there. They're not making their money there. They're not, and left as a child. Okay.
Right.
So that, once again, I think that, a note to file, a memo, and then that being signed off by, your board or your senior management, depending on what your manual says, should be sufficient. And the other thing I do want to point out before I forget is that a lot of information can actually be found in the public domain. I don't know what we did before the internet, but there's some very, very good resources out there, and you can often explain, I don't want to say explain things away, but quite literally explain things away or support your decisions by looking at reputable websites. So that is the approach I would take. Now, a lot of this also comes down to the approach by your regulator. Your regulator may be happy in the fact that you initially thought this was a high risk client, and then you're able to justify that this client isn't. Okay.
Mhm.
what does your risk rating say when you risk rate this individual? All right.
Well, see,
And
a
the
lot of
other,
people use these risk matrices, where
right.
even in our system we do the same thing. You enter the information on them, like where they live, where they're born, what their nationality, what industry are they in, and then that just calculates a score. And
Mhm.
a lot of people I know use various different risk matrices, um, and then they kind of and then what my question, I guess, what a lot of people struggle with is like suddenly you get the score, you get this number that says, okay, they're high risk because they got X number. I can't change their nationality, you know,
You
but
can't.
but I still think well, wait a second, I've done my due diligence. This guy's about a low risk as can be. And yet I just kind of wonder what are the regulators or inspections and audits coming across. Do you think
Right.
if we address that factor in a compliance manual, each firm did, that they could maybe you can get a senior management approval and then say, all right, yeah, we're going to just you make them lower risk.
If you
We're
decide
going to.
you're going to look to lower the risk of a client or declassify a PEP,
Mhm.
you ideally should have a policy on that, around that,
Okay.
and
All right.
steps to take.
Make an adjustment.
Um,
Okay.
and so, and that, and your compliance person, your AMLCO will write that. How applicable is it? I mean, you may even want to say, I've taken on this client, and maybe for the first year, we will maintain this client as high risk, and then see what happens,
Oh, that's a good idea. Yeah.
right? And
Good
if
idea. I
we
like that.
feel after 12, 18 months, 24 months that they're not necessarily posing the risk that we initially thought, or things have changed, that is where, once again, you may want to go back, revisit, re-risk rate, and then move forward from there.
Yes. Okay. Good call. All right. The next scenario I post here is, what if a high risk shareholders or UBOs are in a corporate structure? Do you have to make the corporate entity high risk? And if not, should we specify exactly when the corporate entity is high risk in our policies and procedures manual? So, for instance, like if that corporate entity only has one person who's got 25% control is high risk or
Mm,
something. Or one,
okay.
what do
So,
you think? And this is just applying. This scenario is just for shareholders or UBOs, not directors, because that's my next
okay.
question.
All right, fair enough. So the first question, of course, I always have is, what service product are you providing, and then who is your client? All right. So, for instance, let's take a company manager. The client really is the company you're incorporating, but then
Right.
who has ultimate control? Well, those would be the directors. But where would the funds and resources be coming from? Quite possibly a shareholder. So you have to look at everything. Now, depends what your manual says. It depends what your likes and regs say, and it depends what your risk rating says and how it's designed. So you have to look at that. And not all high risk clients are created equally. So you may have a high profile or high risk client for their jurisdiction of a residence, or where they're doing their business, but that's not necessarily a politically exposed person. All right, a politically
Right.
exposed person brings in a whole series of other risks. So once again, that's where your manual comes in. All right, and the problem with the manual is, once you've written it, it's approved by the board, you have to follow it. Um, so if you want wiggle room, you have to actually write wiggle room in there. I, as a compliance person, and just to let you know, Kim, you say you're a former compliance officer. You're not. Once a compliance officer, always a compliance officer.
Oh, yeah,
Okay.
true.
Uh, I tend to err on the side of caution. It doesn't always make management happy, but the important thing is you look at your risk or risks and then address them.
Okay.
So once again, I would not necessarily be adverse to saying I have a high risk client, UBO, who owns 20 or 25% of the company. However, the remainder of, the other 80% of the shareholders are fine with me. In fact, one is 50% and he or she is regulated, or that entity
Yeah.
is regulated. I think that you
Yeah.
have to balance it off, but you have to justify that. So like I said, if you do leave 2, 3, or 5 years from now, someone picks up that file, they can understand the reasoning behind what you've done. But you do have to seriously also consider the jurisdiction you're in and the approach that they're taking. There are some jurisdictions that tend to be a little more liberal than others in this space.
Okay.
Does that help?
Okay. Yeah, I think so. I mean, to me, it's my call would have be if I just had one shareholder who held less than 25%, and that's just a random number. I see somebody's put in a comment. He goes, "What about 10%? Threshold, not
Mhm,
25%."
mhm.
Again, I think that's your own call. Whether if you've got one shareholder who's a 10% shareholder, um, who's higher risk, I probably would address it to say, I think the corporate entity is still maybe medium risk.
Okay, and that higher and that
Something like that.
10% shareholder may not necessarily, that's not controlling. All right, so that's another thing to consider.
Right,
Now,
exactly. It's that control, yeah.
right,
I
and
might
you're
still do enhanced due diligence on that shareholder, maybe, looking, for instance, at their source of funds,
right.
getting more documentation, but I don't think I would apply, excuse me, um, high risk. I wouldn't require EDD on the corporate entity if that was my client. Maybe
Okay.
just that one individual's. Now,
So,
that would change, however, I think, in my view, if I felt like, wait a second, I've got a couple more, or maybe that one shareholder had 50% plus ownership in the
yes,
country, in the company,
right.
then I might apply the higher risk status to the corporate entity.
And your
Um,
threshold in the Cayman Islands for CDD for a shareholder is 10%, whereas in other
10%,
jurisdictions
exactly, yeah.
it's 25. So that is a game changer.
Yeah. And that's kind of that unlevel playing field again, too.
Right, right.
So the next question is what again is relating to the director. What if I only have a single PAP or high risk individual director? Um, would I treat that entire corporate entity? And I think we probably agree here. If it's just a single director, and that director was high risk, I probably would treat the company as high risk. But if that was just one director out of four or more, or something like that, again, kind of looking at how much control or influence do they have in the running of
Right,
that company,
right.
then I would not. The less control they had or the less influence they had, the less likely I would mark the corporate entity as a director. But these are two situations where I have a lot of people reaching out to me and go, well, do I have to make the company high risk if I have a connection behind them who is high risk? So I would look a little bit closer at PEPs because those are the ones who are, I think, higher risk than anybody else.
And just to interject really quickly, not all PEPs are created equally either. So you
That's
have to,
true. Yeah.
are they foreign, are they domestic, are they PEPs that are related to an international body such as the UN? Is it a
Hmm.
close family member? Is it a close associate? Are they a PEP that is handing out contracts or signing contracts for
Yeah.
a government subcommittee? I mean, these are the types of things you really need to be made, discover, and once again, document before
Right.
you make a final decision.
Okay.
Okay.
Yeah, I definitely agree there. Enhanced due diligence definition, again, for those who are new, is this your wording, Angela?
Includes
Did
an
you,
advanced
or,
CDD process that provides further risk investigation. Usually, it's designed for higher risk. Might be yours.
okay. Okay. um,
And if you Google it, you might get another definition. Um,
exactly. Yeah. So there you go. So enhanced due diligence basically is just that further investigation, and it's designed for the higher risk or some in some cases high net worth clients. Is in your mind is a high net worth client automatically high risk?
Not
In my mind,
necessarily,
not
no.
not necessarily. Okay, I want to make
But
sure.
some companies and some jurisdictions believe that. I mean, there are a lot of high net worth clients out there, right?
Hmm.
And what's deemed to be high net worth, and so you have to also then go back to your legislation,
Yeah,
right?
because sometimes there's actual number limits. If they have, I want to say like X millions in their high net worth. If they have more than that, then they're ultra high net worth.
Yeah.
Um, and they are harder to do due diligence on, not just enhanced due diligence, but due diligence because their wealth is generated from so many real estate, business shares. They're involved in so much that I don't even think half of them know where their money comes from. But
Mm,
again, that EDD can include that deeper research into business associates, their control or ownership of other corporate entities, not just the one that you're involved with, any past regulatory or legal or law enforcement issues. So that's kind of like that adverse media or any negative news. You're kind of doing your Google searches or using your screening tool, whatever screening tool you use. Let me ask you this, Angela. Is EDD a guilty until proven innocent process, or is that too much?
Once again, you keep throwing me under the bus here.
Sorry, I just like opening the worms
Yes.
here, a can of worms.
Is it? Not necessarily. No. So keep in mind, 9,999 times out of 10,000, your client doesn't even know you've risk rated them. Okay.
Right.
So you actually have that benefit. So not necessarily, but you need to be able to justify your decisions and the approach you take. And if you are applying EDD, like I said, a lot of information you can get is actually on the internet. All right, a lot from very, very reputable resources and sources. So it's every time I've applied EDD, it has been different than the last time and the time before. Every case
Yeah,
is
there's no
different.
checklist. If anybody's looking for a checklist here, you're in the wrong place.
Right. Now, what do you
Yeah.
think? Do you think you're guilty until proven innocent when it comes to EDD?
No, I
No.
don't. Again, my goal as a compliance officer is to protect the organization I work for, whether it's from reputational risk from onboarding the wrong client, or regulatory risk, getting a fine or any kind of
Right.
breach issues. That is my
Right.
number one priority, is protect that organization. Um, and so no, I don't think guilty until proven innocent. It is much like you say, it's documenting why they were deemed high risk, why I requested certain documentation, and making sure that the managers or owners or the board understand these are the risk issues we found. This is how we kind of, I as a compliance officer feel I'm either comfortable or not comfortable, and then letting them make that call
Mhm.
as to whether, of course, and this is beyond, that we're not even approaching, oh, there's some suspicious of money laundering. That's a whole different ball game right there. This is, I'm assuming we have no suspicion of money laundering or terrorist financing or any kind of financial crime. So going on to the next slide, you gave me some example wording used in a manual.
Mhm.
And so, and I think this is probably the hardest part for a lot of people, especially when I'm looking at manuals, because I do see quite a few manuals across my desk. And I do feel like the EDD wording is very brief. Similar to here, it just should be required because, and again, it's hard to document in a manual what should be required, because there's no checklist, and it depends on the risk trigger, what
Mhm.
you're going to ask for. So I liked this wording. It says may be taken, and it gives some ideas. I think, what's your finding whenever you're doing audits? Are you
Um,
finding that the EDD wording is sufficient, insufficient, missing completely?
No, not necessarily missing completely. First off, this is, I believe, from my manual, my company's
Okay.
manual. so, um, so when you think about the manual, there should be some wording within the manual. The issue with any manual is that the more you put in, the more you're expected to do, right? So you want some wiggle room. Now, when it comes to dealing with your files, I'm terribly old school. I still print things out and actually use paper pencil. That there's a couple of reasons. The first is I'm not terribly IT savvy compared to others, and also because if I want evidence that I did a Google search and found the following links and this information on such and such a date, I think if you actually print it and save it, it's
Well,
actually
and I
there.
think that's
Okay,
what's
because
missing. I think people don't do that enough. Even if
yeah.
you don't find anything, you've got to document. I did a Google search. These are the terms that I searched,
Mhm,
and nothing was found. And you've
mhm.
got to print that screen and put it on that file
Yeah,
to prove
because
evidence that
right,
you did
because
that
you may be
search.
very you may very well be asked to prove that. And you say, well, look at
Hmm.
this is what I got. I did this on
Yeah.
November 2022. This is what I found. Now it is now Jan 15th, 2025. Has the website changed? Yes. Have things changed? Of course they have. So
Right.
that is the approach I take. I do like to see, as you said, like a file note or an executive summary at the very beginning, because even if it's a few pages, it actually will give the person picking up that file an understanding, the reasoning behind what has been done. And that is really
Right.
important. So these are just a few ideas. The thing is, if you do write your manual for your firm, take into consideration what you've done in the past and what you might have to do in the future. Take into consideration, there may be other sources going forward in a few years that we currently don't have. No one thought of the internet and using it the way it is 30 years ago. It just wasn't
Right.
out there. So that is what you need to do. But you need to be comfortable with your UBOs and be comfortable with your operators, your directors, because they are the people controlling the company. And source of wealth, source of funds in Cayman, in general, what I'm seeing is most companies are looking a source of wealth, source of funds, regardless of whether it's regular CDD or enhanced CDD. The idea
Right.
is, where is the money coming from?
Yeah. Yeah. I'm getting that sense too,
Mhm.
since
Now,
last month.
other jurisdictions, it might be a little less stringent.
Hmm. But that's not saying that they're getting documentation on source of wealth and source of fund. They're just getting the information. And this might kind of lead us on to the next slide here, where this is actually the Cayman Islands guidance notes at section 6, page 63. They give some examples, and I really like the Cayman guidance notes. I think they're very well written. But whenever I first see this, my first thought is, but wait a second, a lot of people are already getting this information as regular CDD. So
Okay.
what does that leave room for enhanced due diligence? And I think the answer I've kind of come up with is maybe they request this kind of information just in a like a questionnaire format, or a form filling format, but then when it comes to EDD, they seek documentation to verify this information.
Yes,
So the
verification
wording
is
says
important.
obtain additional information on blah blah blah. Um, but I think this might be where a lot of confusion or frustration gets. They go, well, this is all EDD, not CDD. But a lot of Cayman firms are having to, and it's not just in Cayman, other jurisdictions as well, are having to answer these surveys that seems to require this information. Is pushing people to say, you better have this information just as part of your regular onboarding, but you don't have
Mhm.
to verify it with actual documentation in any way unless they're high risk.
And
Is
then
that, would you agree with that?
definitely. And the other thing
Okay.
is, we risk rate our clients, and you are expected to apply EDD in the case of any high risk or higher risk client. And once again, that depends on how you risk rate. Okay. But everyone knows there are certain thresholds that need to be implemented into your risk rating process.
Mhm. Yeah.
So,
Yeah.
okay.
All right. So, and touching again, I am seeing a few questions about source of funds and wealth information. And again, for those who listened in to our webinar last week, I had another guest, and she kind of mentioned that things like source of funds information or source of wealth information is being required as part of CDD. But however, I think was kind of was later clarified. It's that's getting the documentation to verify that source of funds or wealth information. That's part of the EDD. So again, you can just kind of log that they say, yeah, it's my wages or it's my salary or it was, a sale of a house. But until they go into the EDD stage or high risk stage, then you would get copies of those pay stubs or contracts or wills or loan documentation, that kind of stuff.
Or as I once had, divorce proceedings.
Okay, there you go. Yeah. Well, let me ask you this: did you have to dig down into the source of funds from the divorcee, whoever had
The
to pay?
divorcee was more than happy to give us all the information. It's really interesting.
Oh goodness, I won't go into that one.
It was
Um,
a fun day.
Yeah. Okay. So CDD versus EDD for individuals. So I've given some lists here, or some ideas. Again, these are just ideas. You do not, and of course, know your specific jurisdiction requirements for your CDD requirements. Sometimes you have to get two passports or two forms of, photo ID. Sometimes you have to get, multiple forms of address verification. I think in Hong Kong, Chinese, they have to get cell phone information. Um, you might want to, you definitely want to screen against sanctions in today's environment, even before you onboard somebody. You might have some applications or director investor questionnaires, finding out that information. Angela, would you add anything to the CDD examples for an individual?
Risk verification, so okay. Screen against sanctions application. In some instances, some countries like to see reference letters. And like I said, in Cayman, it's not unusual to request source of funds, source of wealth, employment. All right. Depending, once
Okay.
again, on the service you're providing, who your client is. So if I'm going
Yeah,
in to set
yeah.
up a bank account for myself personally, I will be asked, well, where do you work? What is your employment? Can you give us a letter of employment? All right.
Right.
But for a a company that's setting up a bank account, the requirements will be different. So it's different from jurisdiction to jurisdiction.
Okay.
We're
And
pretty compliance heavy down here in Cayman.
yeah, yeah, we are. And do you think CDD is more of a checklist? Little
That
less
easy?
wiggle room?
Yes. Yeah, I
Yeah,
do. I think,
yeah.
it's
Okay.
regardless, everyone quietly and covertly actually likes checklists. I've
Yeah,
done this.
well,
It makes you feel you've actually accomplished something. Um,
yeah. But then
Whereas
EDD
EDD,
is wiggle room. Those are the key
yes,
words. If yeah. So
little room,
CDD
Wild
kind of
West.
wiggle room, Wild West. There you go. So yeah, so you might have your basic checklist for CDD and a little bit more wiggle room on your EDD options. We do call it an options. One thing I like to do is, and this is that you talk about, technology. There are these new ID verification tools that are technology where you can have somebody, they have to move their face because a lot of us we're not meeting our clients face to face. Um, our customers, and so they can do these online verifications where it's matching the ID that they use, but then making sure the photo matches.
Yes,
Um,
and please check your local legislation in this regard. Okay,
mhm.
um, some entities, or pardon me, some jurisdictions are a little more user friendly in that space than others.
Yeah, yeah, and I do wish, is one thing I do wish the regulators would be a bit more open
Mhm.
about whether or not they would accept these new tools, these new ID tools. Being in the tech space myself, because I see these tools, I think this would be awesome to integrate, but then I can't get the confirmation that it would be useful, that it would help our users pass their regulations, better. Um, Another one too I like to do is Google Map addresses. I don't know if you can do like the where you can actually put your little person on the Google Map and it shows the screen. Um, I have actually looked in the past when I was a compliance officer at the physical address using Google Maps and thought, wait a second, this does not line up with somebody who's supposed to be making $1 million a year, or have that kind of net worth. This seems to be more of an apartment block. Maybe they own the building. I don't know, but and of course, for even yesterday, I was looking at an address in Uzbekistan, I believe, and I could not find the street using Google Maps. And I
Right,
think
which
that's
is
just
a
where you
bigger
have to make
country.
the call. If you cannot confirm that address is a legit address, especially when you're dealing with, a global client base or customer base, you do have to make the call that it's I can't confirm this address. So that's the thing. And of course, you might get things like letters from employers. You got your adverse media searches, letters from lawyers and accountants. Um, that might be like confirming, source of wealth, funds, or something like that. Um, Documenting salaries, obviously documenting your senior management or board approval. You could also screen and monitor them more frequently. And of course, you could also limit your higher risk individuals or from certain products or certain services, or limit them in transaction amounts. And again, that's again, get your legal advice to make sure there's no liability issues if you block a transaction. Um,
Yes.
or
And
so
that's
that's
very important.
yeah, very yeah. This is for a slide on CDD and EDD on corporates, and I made I want to point out this is for existing corporates, not new corporate entities. Um, so you have, again, your little checklist of the things that you would probably get just for regular onboarding. Anything that you would add to that CDD slide, Angela?
It's quite extensive. The good, okay, the good thing about a new client is it's brand new, so you focus more on the UBOs, whereas with an existing client, the company has a history, right?
Yeah, yeah.
But that actually in itself makes it
Easier, I think.
in a sense easier. Okay, so if we look in Cayman, we have approximately 30,000 mutual funds, hedge funds, private equity registered here. So for a mutual fund hedge fund that's been around for a while, I will say, well, okay, so who's your RO? Who's your administrator? Who is your offshore legal counsel? Who's your onshore legal counsel? And if I start to see names that I'm comfortable with, and that gives me a level of comfort, hopefully not a false level of comfort. All right. So that
Right.
does help. So there's, once again, you have to look at the one thing that we haven't discussed actually is purpose of the company. Mutual fund, hedge fund, which is an exempted company here, registered in
Okay,
Cayman,
yeah.
is going to
Add
be
purpose
different
of company.
than
Yeah.
an ordinary resident company, right? So you have to take that into consideration. And why has this company been set up and what is it doing? Right? That's, once again, one of the first questions I ask, just in my
Okay.
own. Who's my
And on
client?
the
What is this company doing? What services are we providing?
okay.
Okay.
Yeah. And anything on the EDD side where I'm listing,
Uh,
same thing as before, you might want to do a Zoom call with key personnel, Google Map address, those internet searches, but maybe contracts from select major customers. That could be a
could,
key. If that was the if the for instance, let's say if this corporate entity had a branch in a higher risk jurisdiction and you wanted to make sure that not the majority of its funds, its revenue was coming in from that higher risk jurisdiction. So you might want to get some contracts or revenue information from major customers that aren't in the higher risk jurisdiction. That's where I'm kind of saying address the risk issue, the risk trigger. Don't just tick the box necessarily. I'm not saying you have to get contracts.
and where is control, right? And the other thing
Yeah,
is often the more you search, the more you find, the more you have to search. Okay. So this
yeah,
goes back into that adage that what I do for, say, a fund that's incorporated here is this search is going to take me down a different rabbit hole than if I'm looking at a company that sells ice cream, has an ice cream stand. They're just different beasts. So they have to be approached differently. So your searches are going to be different. And if you're really lucky, you have someone on staff who loves to search. Every once in a while, you come onto someone who can like find anything and scrape the net in various languages, and that's awesome. If you get one of those
right.
people, that's great.
Okay. I have a question for you, and that's if this existing company is already listed on a stock exchange or it's
Mhm,
regulated itself,
mhm.
would all of this CDD, would you require it just for safety's sake, or would you go, oh, wait a second, this is XYZ, they're listed on New York Stock Exchange, that's good enough for me?
So once again, this comes down to what your local regs and regs say, and then of course
Mhm.
what your manual says. In Cayman, as a general rule, okay, you would say this company is regulated on a recognized stock exchange, and we have a list of recognized stock exchanges in the Cayman
Mhm.
Islands. All right,
Yeah.
so I can apply what's called simplified due diligence, and that is listed out in our AML regulations as to which entities you can apply simplified due diligence to. Okay, so a
Okay.
company that's regulated with our local regulator, a company that is traded on a recognized stock exchange. Um, there are about 5 or 6 of them, but those are the two that come to mind at the moment. So then I don't have to go down this rabbit hole unless, okay, I risk rate this client uh, medium or high. And that depends on how my risk rating is designed.
Okay.
So there are a number of things that come into play, right? But if I have a low risk client that is publicly traded, I should not have to get everything. I
Okay.
should,
All
but I
right.
have to be able to justify my decision, note to file, this is the reason we did this. Here, we have evidence the company ABC, as of November 9th, 2022, is traded on the New York Stock Exchange. There you go. All right. Because that stock exchange listing could fall away in a couple of years. Right. So you
Yeah.
have to look at it. The day that you are doing this is the day that your file, you need to evidence that date and the decision taken on that date. Okay. The information you're looking at. So does that help at all?
I mean, I think so. I just wanted to get your idea there because the reason why I asked that question is like, because if we do skip this step because I mean, they're listed on a stock exchange, then how would we know if there's any higher risk PEPs or individuals behind the structure?
Mhm.
Or does that not matter because the listing itself or the regulation itself, they're addressing it and their due diligence to keep it listed? That's that's always been my kind of argument, saying, hey, look, if they're listed, the stock exchange is going to know everything about them, or
Yes.
their regulator will. So
Right.
we don't, and if they've still approved them, then we're good to go. So that's maybe that's just where I kind of go, maybe we don't need to do it. Sorry, I just realized we got about 10 minutes to the top of the hour, so we're going to rush through this slide here a little bit, and then I do want to get to some questions. And just so you know, for our audience, we have over 600 people listening in. So um, I'm not going to get to all the questions, unfortunately. But here we go. So this is the last slide before we get to the QA section that we'll try to rush through some of those questions. So this is for new corporates. And again, we don't have that history. We don't have financial transaction history. We don't have tax filings. So we do need to still make sure we've got this checklist of who's the people behind it, who's the UBOs, who's the controllers,
Right.
who's the shareholders. The other thing I would say is maybe you can, if it's going to be a legit, if it's not like a holding company, and its purpose of business is it's going to be doing transactions and releasing a product or providing services, you might want to get its business plan. That said, business plans usually are not written anymore, because they're usually written, you get funding, and then they're tossed aside because people hit the reality of running a business. You might get a pitch deck for investors. That's a common one for us. The expected financial activity, the number, size, or frequency, where they're expected to, their target markets and customers. Just get an understanding of that is what I would recommend. Their website, if there is one, and of course, obviously, you would then do some CDD on the shareholders and UBOs.
Mhm.
That said, again, this is a harder checklist, but these are some ideas. And I mentioned the business plans and pitch decks, and again, plans change. People, companies have to pivot. They have to start entering those new markets. So just because whenever you do your review, because this might be where you do we'll see what what they look like again in 6 months.
Mhm.
And we're going to re-rest them because they're a new corporate. So maybe they don't even have any risk triggers, and they're still low risk or medium risk, but you might still, because they are new, you might still want to review them in 6 months' time just to see what they're getting up to
Right.
and how they're doing. And of course, and then you've got your EDD options again, right in that wiggle room. But here's some ideas there. See, yeah, so okay, we're going to move on to Q&A. I'm just going to leave this slide up, but that is our last slide. But I'm going to see if I can find any. Sorry, we've got tons of good questions. See if I can pull my screen down so I can look at this. So I know I had some good ones earlier that I was trying to find. Someone does ask, how often should ED be formed for a high risk client? I would say at least once a year. What's your thought? Or just get
It's usually
updated?
standard is once a year, yes. And once again, it says it depends what your manual says. So,
Yeah.
but I have seen every 6 months. I think that's, if you put that in your manual, you have to follow it, and that is a lot of work. So every year seems to be what we're seeing. That's the average.
Okay.
Okay.
Another one, beneficial ownership, EDDs. Yeah. So yeah, there's some are just kind of saying beneficial ownership is difficult. Yeah, and that's just where you're going to have to do, the individual EDD, if that beneficial owner is the high risk factor.
Mhm.
Some people are talking about the risk-based approach. It just says risk-based approach question mark. And again, that's where based on your jurisdiction and your what you think you can get. And that risk-based approach is what I think is also frustrating people, because most jurisdictions that we deal with, they're said, yes, you can apply the risk-based approach. But I think what some people are saying, are feeling the frustration, is that then they get an inspection and the inspectors come in with a checklist. Are you getting that kind of feedback as well, or sensing that? And then they're
Mhm.
basically the risk-based approach kind of goes away during an inspection because you didn't get X, Y, Z.
Didn't I
Yeah.
earlier say everyone loves a checklist even though they don't want to admit it?
Yeah, exactly. And that includes the auditors, right? Okay,
Yes.
exactly.
Yeah. Yeah.
Okay. Gosh, I wish there's just so many questions and there's so many good ones I wish I could get through. Oh
Well,
gosh. I'm trying to get some that we can actually answer. Is this the challenge I'm experiencing here? We've already answered about 20, we had mentioned 25% and they were suggesting 10%. That's fine. Um, oh, here's a good one. Does the EDD also apply to the ongoing monitoring? So are you re-requesting all this enhanced due diligence, or re-reviewing what you should get?
okay. So let's take a client you take on November 9th, 2022. You
Hmm.
risk rate that client high risk, you perform EDD. Your next review should be sometime in November 2023, okay, or October, ideally before the trigger date of the 9th of November.
Hmm.
You may choose to you may risk rate that client, and maybe material changes in that risk rating may come down to medium or not. Now, if that's the case, if documentation is still valid, if passports have not expired, you don't have to me, I would not go out and get another passport, a copy of the passport that's already valid. Many companies have a review document where, once again, it's a bit of a checklist. You go through and you ask for material changes. It are your directors are still the same of this company? Are your UBO still the same? Have your um, has the company purpose of the company changed? These types of things. Okay, so it's sort of,
Okay.
you look at your checklist, you look at your enhanced due diligence, you look at what you've got on file, you look at the risk rating, and you re-risk rate, and then prove it. And I
Yeah.
hate to use
Proving
the
it.
term
Yeah.
paper your file, but paper your file, because
Yeah.
in
It's
2
the
years, or
documentation.
when your regulator comes in, you can say, yes, I have reviewed this file twice. It's high risk and it's been with us for 2 years. There you go.
Yeah. Yeah. Okay.
Okay. Does that
Um,
help?
yeah, I think so. This one says, is it best practice for the MLRO or the compliance team to sign off on an EDD case as a matter of completion? And the answer to that to me is it's got to be senior management, whether it goes up to a risk committee or a board member who's
Yes.
responsible, but it can't just be left with the compliance team unless that head of compliance or chief risk officer, depending on how the size of your company, Ajay, that depends on the size of your company and how senior your compliance manager is. But I would not leave it with the MLRO or the compliance team
Yeah, the
unless the
MLOs,
MLRO is senior, a senior
right.
manager.
Yeah, unless they're carrying a different title, right? Unless
Okay.
MLO is director or senior management, your AML CO. Once again, you need to look closely at your manual on what your policies procedures say.
Okay. And Salone, I believe that's how I'm pronouncing the name. She's asking, doing an adverse media search using, let's say, Google. What is the best practice in determining whether hits may be false positive? So, and I take that meaning like you search Kimberly Smith, and of course, common name, a whole
Ah,
bunch of stuff comes up. Apparently, there's a Kimberly Smith in Baltimore, no, Boston. Can't remember who's on something. Sorry, because I keep getting stopped at immigration when I come back into the U.S. Um,
yeah.
but yeah, it would. And whenever, and it's another thing I would say too, if you're looking for a company, don't just search ABC company and then expect to get something. You might, because a big company, let me tell you, they're going to manage that first page of Google results. I have done things where I've Googled a company, Nothing came up other than like their website. Everything looked good. But then as soon as I Googled the name of the company and added the term,
Fraud.
you know, fraud, or it was actually human trafficking. Then
Oh,
they came up on a human trafficking hit. You know, it was a company
yeah,
based in
yeah.
Africa that did some kind of plantation. They used child labor. So that's what you're kind of looking for. Is that's how I would do your searches when you're doing searches. Don't just search the name. Kind of dig down into what's the risk factor. You know,
Yeah.
you can do it like the name of the company and fraud or embezzlement, or in a person's name and embezzlement, that kind of stuff.
And
The
keep
other
in
thing
mind
too.
as well as you've got 50 states in the United States. So I can
Yeah,
incorporate in Delaware, RiskPass AML compliance, but then I can also incorporate it in Nevada,
Arkansas.
where someone
Yeah,
may have
yeah.
the same name, but totally different shareholders and directors in Nevada. Okay. They're not the same companies, they're not the same controllers, and not the
Yeah.
same directors. So you have you have to make sure, because I've seen that sort of situation where, oh, this is a bad company. No, 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 you're looking at the wrong state, right? This is not a
Okay.
bad company. The state you're looking at is a company with exactly the same name, all right? Totally different entity.
Hmm.
So those,
Okay, one more, and they said, is it acceptable to use a certificate of incumbency from the registered office in place of collecting full corporate documents?
it depends, okay?
On the registrar.
Yeah, yes. I mean, to be very honest, some older companies, there are companies that can't find stuff. Okay. And the other thing is you can go back to the registrar of companies, depending on the services, the website you've got or the access to the registrar of companies, and evidence that this particular company, even though they have lost their certificate of incorporation and should have had it replaced a long time ago, is valid. Okay. So once again, that gets into the verifying space.
Hmm.
All right. But I have
Okay.
seen it, I have seen it.
Okay. All
All
right.
right.
Good. And so one last one, because this one just he said, Mark asked, is for source of funds, is an email attestation sufficient? And I would say it depends,
Yeah.
which is typical. It's I think for the CDD part, if it's just to say, yeah, their source of funds is going to be, the bank loan, and maybe you might want to go into and say, well, what's the name of the bank, who's given the loan, what's the loan amount, that kind of stuff. But if they're EDD, if they are definitely high risk and you're getting enhanced due diligence, that's where I would ask for some documentation to prove
To
that it is
support.
that bank that
Yeah.
gave that
Yeah.
loan, as an example.
Mhm.
So source of funds, find, email, information. You're just gathering the evidence. I mean, gathering the information, but then if they're higher risk and they're EDD, then you got to gather the evidence. Okay,
Yes. No
so
question.
I apologize again with so many questions from so many people in our audience. We just cannot answer everybody's. I do try and go through them though, and then we will release the recording. It will either go out Friday or early or by Wednesday of next week, because we always do a little bit of editing, and I do like to give a little bit of kind of summary in that email, and I do go through some of these questions as well. So before we go, one last poll. Want to find out if how we did today. This is our this is our review, our online review. How did Angela and I do today? But in the meantime, Angela, I really thank you for your time today, and also for filling in, because we had another guest planned for today, and unfortunately she couldn't make it due to a family emergency. So thank you for filling in last minute, Angela. I do appreciate it. I
Always a
really
pleasure.
appreciate your ideas and your experience and the insight, and I do hope it's helping others as well.
And I
Do you
told
have
you we
anything
would
going
not be
on?
short.
Exactly, never short of conversation with us. And do you have anything going on? Are you doing any conferences? Are you doing any online training that you would like to let the audience know about?
Well, yes, we actually have online training specific to Cayman, and we will be rolling out online training specific to BVI in the next little while. So for those of you who are in either of those jurisdictions, please feel free to get onto my website, riskpass.com. All right. We are here. I never go on vacation. I'm always on the island.
Yeah.
And I don't know if people are aware of us, but we are the oldest and I believe possibly the largest fully independent compliance company here on the island. We've been around
Okay,
for at least 15
fantastic.
years. Okay,
And we seems to have helped.
good.
We've made 42% of our audience more comfortable with their EDD procedures, and 53% say they have some fresh ideas. Yay!
Okay.
So that's what I wanted.
Someone's confused though. My
Yeah,
apologies.
that's well, sorry guys. Again,
Welcome to the wacky
um,
world of compliance, okay?
exactly. It's always a challenge. It's one thing one thing they say about compliance. It's if it was easy, anybody would be doing it, right?
Yeah.
So yeah. So here's Angela's let me see. Oh, sorry, I forgot to share that. So that was the results there. And this is Angela's details. If you need riskpass.com, Angela Mealy at riskpass.com, as well as her email. And of course, there's some of your services that you provide.
Mhm.
So again, thank you very, very much. Before we go, I also wanted to tell everybody, thank you so much for following us on LinkedIn. You can follow Silo, you can follow myself, Angela, Tom Gardner. Please keep following and sharing your certificates and sharing these webinars with your colleagues and anybody else. We are definitely growing our followers, so I do appreciate that. It's great. So, and again, today's broadcast will be sent via email within 3 to 5 business days. And you can also find all previous broadcasts for free on our website at silocompliance.com. There is a page, AML Gray Matters, a resource page, and all of our old videos are up there.
Yes.
All right, so thank you very much. And before we go, really that's it for today's broadcast. I want to thank you to our audience. I do know your time is very valuable, so thank you for spending that hour with us. And I do hope you found it helpful and informative, and it's helping these broadcasts are strengthening your AML program and keeping your organization safe from the current landscape. And I mentioned several times that documenting all of the CDD and EDD is the key to complying with any kind of audits or being able to demonstrate that you're complying. So if you are struggling with that aspect, and we do have a wonderful system, Silo Compliance, it is used throughout the Caribbean and some other jurisdictions. Feel free to stay on to learn more about Silo. I call it an AML due diligence management system, or better yet, reach out to Thomas Gardner to schedule a full demo. Until next time, this is Kimberly Smith signing off, and Angela Mealy. Thank you again.
Thank you, everyone.
Anti-money laundering compliance and customer and vendor onboarding involves multiple processes that must be done correctly and by the right people in the most efficient way. The tasks include gathering customer and vendor ID and verification documents, screening against sanctions and politically exposed persons lists, analyzing any reputational risk, periodic monitoring to assess any changes and updating due diligence, and staff training on money laundering, terrorist financing, bribery and corruption awareness and risks, as well as keeping them up to date on your policies and procedures and new regulatory requirements. In addition to the onboarding processes being strictly followed and documented, management must have access to critical compliance metrics and information to steer the company through regulatory waters and mitigate customer and other risks. With Silo Compliance System, these obligations become much more efficient. With Silo, your staff can enter the customer's information and upload due diligence documents and any other documents that you require. Key information entered about your customer automatically calculates a risk score, a calculation using a risk-based approach determined by you at initial implementation of Silo. In addition, if you have screening enabled, when the customer's name is first entered into Silo, the name is checked against sanctions, politically exposed persons lists, and adverse media. You'll see results of screening immediately and can review any potential hits right away. And with screening enabled, your customers and vendors are continuously monitored for any sanctions advisories, helping you get ahead of any potential reputational risks. No company is too small to benefit from using Silo. Even if your onboarding processes seem under control today, if one key staff member becomes unavailable or there is any increase in your customer portfolio, compliance with strict onboarding and review processes can quickly overwhelm a small company and put you at risk. Plus, implementing Silo can reduce the need to hire additional staff to manage compliance obligations and reduce your risk of non-compliance regulatory penalties and continued inspections. No one goes through an inspection or audit with great ease, but several users have reported that their inspections went more smoothly and with Silo they had improved outcomes. Reach out to us today to schedule a demo of Silo.